In terms of the volatility then, because you're long-term focused, you don't mind so much the volatility that you see in silver relative to gold. Am I correct?
I don't mind. I'm comfortable taking this wild ride. When you first buy in, and if you make your buy at a bad time, and you see the dollar value, if there is such a thing as a dollar value,
Right.
but when you see that shrink by maybe 50% because of this huge pullback, it's hard to take at first. But you know, I'm in for the long view, and I see. Going back, you mentioned 16 to 1, but that's the historic ratio for the 500 years where governments were pegging and stuff. Before that, you've got what Dave Morgan calls the classical ratio, where it was about 12 to 1 for the first 2,000 years that gold and silver were used as money. And that was basically the free markets doing, you know, you're using them as money, buying goods and services, and the price discovery mechanism is setting a price on those. You know, everybody does a little bit of dickering to strike a price on something. And what they're doing is they're setting price levels. When you take the total sum of all the transactions in that society, they're setting price levels, but they aren't setting the value of the good, they're setting the value of the currency that's used to purchase the good. This is one of the things that the average person doesn't understand. It isn't the thing changing, it's the currency changing all the time.
It's also sort of a free market answer to the, to the relationship between gold and silver, because although I'm not a geologist, I understand from the geologists that in the Earth's crust, there's about 10 or 12 times more silver mined every year than there is gold. So one would think that there'd be 10 or 12 ratio.
The mineable supplies is about 12 to 1 is what I heard.
So rather than
and
65 to 1.
Yeah, it was the free markets doing the price discovery mechanism accidentally. You know, you're setting a price on the good valued in silver or gold, but it's accidentally finding the price discovery mechanism between silver and gold and setting their values accordingly, according to how much is available. It was just the rarity. There was 12 times more silver in circulation than there was gold.
Yeah, exactly.
That's what I believe.
I use the word spontaneously rather than accidentally, because the market just discovers these things on its own. And that's why I put such great faith in the free market. That's where the solutions are. I think that's where the solutions to today's problems lie as well, in the free market.
I believe that also, but the free market is probably going to get blamed for the problems, even though we don't have the free markets. You can't have free markets without free market money.
Exactly.
That's 50% of every transaction, so the markets have to select what money is, and for 2,600 years, the free markets have been selecting gold and silver over and over and over again, and the free markets never select anything else.
Yes. It's only currencies are circulated because of force. Initially because they were tied to precious metals. When the tide of precious metals was broke.
That's the only reason they could circulate.
Because they were as good as gold.
I
remember as a kid that used to be the expression, the dollar was as good as gold. And that's pretty much true up until the 1960s. It's surely not as good as gold anymore, as we see the gold price rising and the dollar losing purchasing power on an ongoing basis. So I think the markets will eventually go back to gold and silver, which goes back to the point we were discussing earlier, that I think we're going to see gold circulate once again as currency. I think we'll see silver circulate once again as currency. That's what they do.
I hope so. It limits the government's ability to transfer wealth from the people to the government. Wouldn't it be nice if there were just two forms of free market money that didn't have a national stamp on them, that cross borders and so on? If you could just circulate ounces or grams, basically, which is what gold money does. But, yeah.